Hello everyone, let's go through section 86.3, trust investments. In this case, we as the attorneys decide to invest in an interest-bearing account. So where we decide to invest, it means all the profit will be for the benefit of the Fidelity Fund. Remember, initially we spoke about section 86.4, whereby a client instructed us to invest on his or her behalf. But in this case, when it comes to the section 86.3 for investment, we as the firm decide to invest. So that interest, 100% of the interest will belong to the Fidelity Fund. I hope it makes sense. So let's just go through some of the questions so that we can be able to understand better. I'm just going to use the same question or similar question that I used for section 86.4, just to make sure that I explain and detect some differences here. As you can see on this question, how should the transaction be recorded in the accounting books when a cash amount of 120,000 is received from Mr. Vesta for an upcoming court case, and the firm decides, you can see the firm decides to invest the funds for the benefit of the Fidelity Fund. So it means we're using section 86.3 in this case. I hope it makes sense. Okay, so it means we need to be careful because the firm decided to invest. This is very much important. Okay, so when they decide to invest, it means we think about the section 86. All the interest earned will be given to Fidelity Fund, also known as legal practice Fidelity Fund. Okay, additionally, upon the maturity, we earned an interest of how much? Of 10,000. It means again we need to account for this interest. Remember, the rules of accounting or basic accounting are still going to be applied. So the fact is we received this amount of the amount. There's a cash involved. There's a cash involved. So we have got cash. So when we see cash, it means what comes to my mind, and the trust bank account will come to mind. Okay, because the cash obviously goes to the bank. So this cash already is giving me an idea of how am I going to record, where am I going to record. At the same time, remember, this amount of money comes from Vesta. So at the same time, we need to understand that Vesta is our client. But remember, this amount is received on behalf of our client, and we still have to perform, we still have to represent Mr. Vesta in that upcoming court case. So at the moment, we owe Mr. Vesta. Can you see now? What comes to my mind is like I'm owing. It means I know that I'm gonna deal with what you call the trust creditor. You see now? Why? Because I know that I'm owing. So when I owe, it means my client will be the trust creditor. So in this case, my client is Mr. Vesta. Can you see now? Already I can see the accounts involved. Can you see now? I'm just analyzing before time. So make sure that you know how to do that. And the fact that we decided to invest, this investment, again, this investment will give us an account. So that account will be trust investment, because we are going to have an investment which we have to have an account for. So we're going to have the trust investment, and we must bear in mind that this trust investment, the interest will be accounted in the form of section 86.3. So the trust investment, already I can see that it's also it's an asset. So again, I need to analyze beforehand. all these accounts are interrelated. So I receive the cash, and that cash belongs to Mr. Vesta, and the cash at the same time will be taken to an investment. So I must open an investment. And then again, this investment is for the benefit of what? Of the fidelity. That's how we talk about Section 86(3), whereby we as the firm decided to invest. The 100% interest will belong to Fidelity. So this again will give me an account, and that account at the end of the day, we need to open an account called what? Fidelity Fund. But we must bear in mind that again, this account is going to be a liability to us because the interest belong to them. So whatever we're going to get, we're going to pay them at the end of the day. Can you see now? So we're going to pay this interest to Fidelity Fund. Still on this, we do have what we call the interest. This interest must be accounted for. That's why at the end of the day, we need to have the Section 83 interest. So I'm still going to have the Section 83 interest. So Section 86(3) interest. So I'm going to open this account so that it will be easy for me to record. So it is important for us to be able to analyze before, because now we've got an idea of what is going to happen. So I hope it makes sense. So this part one, and then the part two is where we are going to record these transactions. I hope everyone understands. Thank you very much.